Hey everybody, welcome back. Well, we have a lot to go over. We're going to start here because we're seeing GameStop move after hours at the time recording this. This one's going to go out late, obviously, as you guys already can tell. But what I want to do is just point out why this is doing what it's doing. You have this talk of a possible YouTube where he's going to be on YouTube tomorrow, this Roaring Kitty guy. I have no idea what he's going to say or if he's going to say something to move it. The thing that you're starting to hear a rumor of, more conjecture, and I think that this is what's really starting to drive the stock, is that earnings are coming out this week. And there is talk, and when I say this, understand this is pure conjecture, pure speculation, but I want to get it out there because you are seeing this, that they're going to possibly do something along the lines of what MicroStrategies is doing with Bitcoin, with the secondary money that they just raised. I have no idea if that's true. You never have any idea. Quite frankly, if we're hearing about it, it's probably not true. But that's what's floating out there right now. And what you'll note is that this did move on the fact that, yes, this gentleman said, oh, I'm going to be on YouTube and I'm going to tell you everything and why I own the stock and blah, blah, blah. And we had a nice move on that. The follow through on the move happened after hours when this rumor started circulating that that's where he's going with it. And that's where the CEO is going with it. Again, we have no idea if that's the case. We have no idea if that's true or not. But I think that it'd be remiss to not go over it before we jump into some other things. Disclosure, I do have a position in it and I do have calls at the time of recording this. Now, let's not do that chart. Let's go this way with it. And we're going to have to go unedited tonight, guys, because I'm running real late with this. And I have a bunch of work that I still have to do to prep for tomorrow. So let's get to it. Tomorrow is the last day that this stock will not be at a 10-to-1 stock split. This is really important. People keep asking me over and over again, what happens after a stock split? It depends. Rule of thumb, if it's the first split, it goes down. This is not its first rodeo. I believe it's our fifth or sixth rodeo. So 10-to-1 Monday morning. Usually you do see buyers step in there. And I would expect that you are going to see some buyers step in there. And I do think you see some of that on Monday. Now, whether or not you do, we don't know. Now, you're going to want to watch Saturday's video because I want to go through some of the companies that are going to come out with earnings next week and then how we usually see NVIDIA act on those. Just a reminder, you have AVGO and it's coming up. And that's coming up on Wednesday. We're going to talk about this on Saturday. What we need to do is go over what we're seeing out there right now and then how we're going to take advantage of the big event that's supposed to happen tomorrow that is not GameStop and whether or not some dude with a cat poster is going to be on YouTube or not. But what we do need to talk about is just, hey, you hit a new high. You hit an all-time high today. Formed a little doji up here. You didn't break down. You could have broken down very easily today and you didn't. And every chance that you're getting to break down on this data, we're not breaking down. And I think that's really important. Now, we're going to go through again, Saturday, equity risk premium. You guys will remember this. We're going to talk about how it's moved. Obviously, it's moved in our favor, but when you see how much it's moved, I think you're going to be somewhat shocked. Shocked, I tell you. But if we take a look at the cues right here, you can see the breakout. This has been your control bar, hasn't it, right? This bar has really been in control. You've never had anything really close out of that range until when? Yesterday. And that's important. Now, these are always areas of interest that I look at, and I'll show you this. And what you want to do is you mark this off very, very clearly, and you can see that right in here. And what transpired there? You had one out that fought its way back in, and then when that broke out, that was it. So that bar is in control, and that's really important for you to get. Always looking for the control bar, always looking for what's going on. Let's talk about what's going on. So it doesn't matter the data anymore. I don't know if you guys have picked that up. We're going to go through some of this data in a second here, but the 10-year continues to be bought, which makes equities actually more attractive, right? So we're seeing that drop. And then people are trying to figure out why IWM is not moving on this news. And the reason is because corporate profits are getting weaker. And that's a concern of ours. But to go back to it, if we take a look at the 10-year, this is a big deal, guys. Like, this is not a small thing. Look at the 200. We cracked it. So we've broken. This 5% nonsense, that's gone. So rates are going to come down. That's going to help certain sectors heavily. ECB cut. Canada cut, UK is being pressured to cut. Do I think they should be cutting? No, but it doesn't really matter what I think. Now, we should just talk about the data for a minute here. So we're all on the same page. We started with Monday, and then just right in line, this global manufacturing PMI. You're supposed to come in right here, right on that level. And yeah, no, you're not gonna be able to see it that way. Let's back that off a little bit so that you can see that a little clearer, right? There we go. I'm still getting used to the system, and we're getting there, guys. We're getting there slowly but surely, getting used to the new system here, making sure that we can figure out how to use it. But it's certainly been a pickle, I'll tell you that. It has not been easy for me to figure out how to use it. Switching from Apple to Windows lately, it's been no joke, but I needed the power. We need more power. But if you take a look at the manufacturing PMI right here, your consensus was 59. You came in at 51.30. That's higher. Manufacturing is higher. This is a precursor. Now, not a precursor for this month, but for the next month. So then you get into it and go, okay, here we are, 49.6. This S&P always leads this ISM, just FYI. It says May, but it's not. It always leads. So then you have 48.7, 49.6. And you can see that, okay, well, we dropped, so that's good. But unemployment on the manufacturing side, well, that's up. But why are wages down? And we can all figure out why wages are down, but manufacturing unemployment is up, okay? And at the same time, manufacturing PMI is down. And wages are down if you go and take a look at wages. Now, that is a problem because that is pricing power, which is something that a lot of companies have talked about on their earnings calls, if you listen to the earnings calls. I'd strongly recommend that if you have like companies you like, start listening to the calls. You'll learn a lot. And you'll understand why some of these names actually move. Remember, we always look at the world as what? A stool, right? You have the macro side of the stool, you have the fundamental side, you have the technical side, and then this is obviously where it all comes together up top, and that controls the world. It's just the way that it is. But let's get back to it. So job openings, well, we're losing jobs, which is not great. I know we're cheering for it, but job openings going away for people is not ideal, right? We'd like people to be employed. And at the same time, the job openings are going away, factory orders are up, which is kind of odd, but another time we'll get into that. So what happens here for us is this. If you have less job openings, you have to think that your employment numbers are going to be lower. Now, this means that if we look here at the ADP employment change right here, 175, and you came in light, this is private. Remember, ADP, when they calculate this data that everybody uses for the non-farm payrolls as a precursor, ADP only uses ADP data. Remember, the devil's in the details. What's that mean for us? They're only showing you small private companies. Non-farm payrolls is a lot more than that. It's government jobs, private jobs, and these are things that we must pay attention to. But again, we came in super light and the market ripped. And then the market did something like what I thought was absolutely crazy. Here's the global composite PMI final. And you came in at 54.5, which is a super high number. Anything over 55 is usually raising rates. So the question is, are these numbers out of whack? I don't have an answer to that, but we're going to talk about 58 and then 53.8. And then you know the market's going to sell down on that, right? What'd the market do? The market went higher. That's higher. That higher's that way. I'll get used to it. But the market went higher. That's a big deal. That's not what was supposed to happen, but that's what happened. The market actually went higher. Now, that said, the employment change for tomorrow, non-farm payrolls right down here. We're going to have to pay attention to this. Consensus is 185. Okay, that's really kind of fascinating to me that that's where we're at. But the previous was 175. Now remember, I'm not going to bore you all with it, but remember that the government jobs, if you go look at when we covered this, portion of government jobs, they were averaging 70,000 jobs. They decided they were going to hire 8. That's why this number came in so weak. So if they're going to do the same thing, the employment change is going to have to come on the private sector. If it doesn't come from the private sector, it's not going to come. But this is telling you that it is probably coming on the private sector. And that's a really important distinction for us. Now, in front of us, we keep hearing that they're going to rotate, right? We keep hearing this definition of rotation, and they're going to rotate into the value names, right? Because they're going to get defensive. This is VTV divided by VUG, and I look at these once a month. I have a monthly run that I review. I can actually post the watch list. But look where we're at on this mark. So does this look like we're buying value? No, value's hitting new lows. That's a really important distinction for us. They are buying growth. So as much as we're looking at some of these sectors where I'm looking for these defensive plays like on healthcare or things like that, or you're waiting for the basic materials to catch up and they're not, it's really important to get that, guys, that we're not seeing that. But what's so fascinating to me is we are seeing it on the XLP side. I don't have an answer to this. So if someone has a clue why the XLP side of the market's running, I'd love to hear it in the comments because I don't get it yet. But again, I showed this the other day where Procter & Gamble is actually outperforming and some big names. So you look at Procter & Gamble, it's ripping. Look at this on a weekly chart. Like it's nonstop. So is it that they've been so depressed for so long that they're finally moving? I'm thinking that's the case. And that's what we're starting to see here, that they've been so depressed for so long that they're finally starting to break out. And it's not just there, but you're seeing it in Colgate too. Like no one just got super excited about toothpaste, right? I mean, it just, you know what I need? I need to buy that toothpaste company. So something's going on here. I mean, this ripped. And you look at when it started, right in January, it's been nonstop. These are the kinds of things that we're always looking for, right? We're always looking for those changes. And I'm constantly monitoring commodities. And we keep thinking that commodities is breaking down, but this is weekly commodities, and this is daily commodities, and this is the Thomson Reuters Core Commodity Index. This is what I use because it has a lot of things in it, not just the big dogs. Does that look like it's dropping? No, it doesn't. And I want to go over a couple of these just monthly charts with you just so you can kind of take a look at what's going on out there. If you look at XLY divided by XLP, which is wants versus needs, right? Because we keep thinking in this, and I like looking at this on a line chart, and I'll keep a 200 or a 55 in there. But if you look at this, we're not going anywhere. We're really not getting defensive. They're still buying wants and needs basically at the same level. That's an important distinction, right? And these are distinctions that you should be looking at, like when you start looking at growth, right? And this is basically us looking at growth on the small cap side versus value. They're buying growth. So when we see these things up volume versus down volume, you're looking for these extreme readings, right? And we're not having anything like that. If I look at XLY versus the SPY, like, are they buying consumer discretionary versus buying the index? The answer is no. So what does this lead us to? Well, it leads us to a couple things. The first thing that it leads us to that I want you to get is they're still buying tech. No matter how much I keep waiting for tech to come back, they're still buying tech. And this is a really important distinction. Now, are they buying tech because of the ASML sales? Are they buying tech because of Taiwan Semi and what they said? Meanwhile, we're all waiting for ASML to roll over today, and what's it do? Forms a hammer at the top of a chart, right? These are important distinctions. I get it. We all want to talk about Roaring Kitty and, we're going to go to the moon and all that. And I got it. It's great. It's actually a lot of fun. I'm actually having a great time besides killing it with the trades. But there's real things going on here where we're going to put real capital to work, right? You're not putting all your, hopefully, sweet Lord, tell me you're not doing that, putting everything in those ideas, but you get it, right? You need to be diversified. You need to be understanding how the market works, not YOLOing. So, maybe it works, maybe it doesn't, but get the concept, guys. Fundamentals, technicals, macro, connect the dots. Constant. You're trying to do this and develop a skill set, understand the difference. And again, I'm not telling you not to do that kind of stuff. I do it all day long, but just understand the differentiation between the two. But if you look at ASML, that's like setting up to break out, right? Then you start going into this and go, all right, let's look at Taiwan Semi. Did that really pull back? No, we broke out. We hit new highs. These are all really important distinctions. We're not going down. So what does that mean going forward? Well, it means a couple things to me. But if we take a look at the market in and of itself, we'd be remiss in not going through like the big dogs like Bitcoin right now. Is this breaking down? It's not. It's just sitting right up here. It became a growth trade. And this is pretty impressive stuff. I mean, when you broke here, you look like you were done, right? We all remember this trade. Let's go through it. And we're going to go through some other big dogs here, some names. I want to get to some micro names for you to look at tomorrow. Keep this one short and sweet, but get to the point. Look at the cup that's going right here. And it's getting tighter and tighter. They keep walking you up. This is setting up to break out. See how tight this is getting? People will call this a lot of things. People will call it like a volume contraction pattern. They'll call it, you're basically forming this cup. It doesn't really matter. What you need to take from it is just the pattern. If you understand the pattern, you understand everything. Right? And really all these patterns are this. So if I put the line here, let me just go back to this right here. We'll stay in drawing mode. And then what you're going to note is they were stepping you down here and they were stepping you down here and then they step you to here, right? And then once they step you to here, I don't know where drawing mode went, but once they step you to there, I'll get used to this Windows, I swear I will. And then here, and then they're stepping you here. See how they're stepping you up, right? That's what you're always focused on. See how they stepped you down here and then they start stepping you up, but they're getting tighter and tighter in here. Eventually what's happening is you're getting rid of all the supply. That's why the patterns are so important to understand. When you understand what they're doing here, that they're just cleaning out, they're cleaning house, right? And it doesn't matter if this is a day chart or it's not a day chart. It doesn't matter. I'll give you a great example of this, and that I can actually show you a trade that I'm going to walk through this Saturday. I'm not going to do it tonight because it's going to take too long, but it'll be a really good lesson for you to get on how to pick out bottoms. But if you take a look at this was the cleanest thing in the world to what I'm trying to explain to you with Bitcoin. Look at 1200 and what they did here with NVIDIA. Look how tight this got. And it doesn't matter if it's a 1 minute, it doesn't matter if it's a daily. This is a really important concept. Does that look familiar? You can actually overlay the daily of Bitcoin and see exactly what I'm talking about, right? They're stepping you up over, let's go back to this little drawing tool. I got to click the button, right? They're stepping you up over, and I'll say it again, over again. Like a step. That's why it's called being stepped up. Now you got it. But this stays the same, right? And then what happens? Boom shakalaka, and it breaks out, and then you're victorious, okay? It was a really simple trade the other day. I do have a plan on walking through some of these this week. Actually, Saturday we'll do a bunch of them. But I just don't have the time. And there's just so much. There's literally so much to go over right now. And I'm trying to pack it all in. Let's go to Bitcoin. Take a look at this. Does that look familiar? It's the same exact trade. It's literally the same trade. It's just on a different time frame. So understand that. That does not look to me like it's going to break down. And that leads us into this. Take a look at coin. And again, people call this whatever it is. I had a decent trade in this. I could have done a lot better. We rallied up and then we just kind of fell apart. But after yesterday's move, a lot of people are going to look at this. What I always look at is this control bar, right? So I always want to see what bar is in control. Well, that bar is in control and why. We couldn't get above it. Hits it, rejects, hits it, rejects, hits it, I'll say it again, rejects. And so people are looking at this and going, oh, well, clearly it's going to go. Well, you could have been saying that forever. You don't know that, right? And then it went yesterday, and so that was the move. You made the higher high today. There's your confirm move, and then it's on like Donkey Kong and starts ripping. Now, whether or not it's just going to be smooth sailing, who knows? And who knows going into the weekend? But if you overlay something like this and you drop this down, well, life gets super, super easy here, right? Because here's your 55. You flipped it, retested here, flipped it again, and broke above the control bar, and you have above average volume. How high this will go, I don't have a clue which way this is going, but I'm telling you right now, are you going up or down tomorrow? We'll know on non-farm payrolls. It's going to be your entire day tomorrow is predicated on non-farm payrolls. But when you start looking at some of these names, they're setting up. I mean, we can say whatever we want, but breaks through the 55. Since it broke through the 55, what's it done, right? And he rallied, tries to break, can't, retests. Looks like it's setting up again. Again, we can say whatever we want about these moves when they're doing it, right? But at the end of the day, this is exactly what's happening. And we have to just, be blunt about this is what's going on. They look like they're setting up to move again. So we might as well just pay attention to it from that, from that standpoint so we can make money on the long side. Now, we're seeing a lot of this. And I'll tell you why I think we're seeing this kind of stuff like on First Solar. And if we take a look at something like TAN, and I'm trying to give you some color for what to do or where this is all heading. Because I think when you see the equity risk premium and we go through that on Saturday, you're going to get it a little bit like, well, everyone's going to be like, well, this can't keep going. And you're going to be sitting there talking to your bros and saying, no, it can because of the equity risk premium. And they're going to go, what's that? And they're going to go, oh, I watched this guy. He runs Arete trading and he has this video. Here, watch this. Anyway, see how you're not dropping? You're not dropping because they're buying equities. Get it? Okay. Once they start buying equities like this, you're going to get these patterns and you're not going to drop. But you're going to drop in other names and get huge volatility. That huge volatility is going to lead to a couple things. I'm going to show you what it's going to lead to. I'm glad you asked. First, DHR is something that you can see very clearly how that is sticking out, right? Why is that running? See my moves here. This is something we bought the other day. Very clean trade, retested the 55. It's on and you can see how it's acting, right? We just waited for confirm, but now you're back to the highs. Now, whether it goes or doesn't go, we don't know, but you're diversifying through names. You're diversifying through sectors. You're broadening out, but the volatility is going to increase as well. Okay. And this is what people are missing. They're used to the saying is, here's the new boss, same as the old boss, but it's not. And so what you want to understand with this, and the way that I'm explaining it is, the volatility is going to increase and you're going to do things based upon the volatility that used to work and it's not going to work anymore. You might want to play that over again. What you did is not going to work the same as it did before. So you're going to have to change your game and understand that the volatility is going to increase, but the VIX is not going to increase because you're going to think that it should, but it really is not going to. The skew changed. We went over this. If you take a look at this level right here, look at this bar. Now watch this. Where do you see this move, this sweet move? And this is the kind of stuff that you have to start expecting. So here we are on earnings on cost, which is breaking out, hitting highs, going crazy, right? And here's the earnings move. And here's that daily level. And what does it do? Comes right down to that daily level, holds, retests, and then just starts ripping, consolidates, ripping. And this is what you're going to be dealing with, guys. So the game is changed and the volatility is going to increase. This is going to create massive shifts for people and they're going to think moves are over and they're not going to be. And it doesn't matter what sector it is. You're just going to see more and more of this behavior and think it's done. But it's really going to be on you to understand the fundamental stories and say, no, the fundamental story hasn't changed. Therefore, I still want to be involved on the pullbacks. That's the difference. That's going to be your differentiating factor now, understanding the micro of the fundamental story once the macros start settling out. Now, as I stated, we had a bunch of concepts that I really wanted you to get tonight, so I hope you got them. And this video is more broad than deep, and now on Saturday, we'll wind up going deep. But I want you to get a couple core concepts. For those that are new, you are aware that there is a target rate. What you might not be aware of is there's a website called cmegroup.com, FedWatch tool, and you can go there and you can see what the percentages are for the FedWatch. And right now, our target rate's 525, 550. I've been showing this all week, and I've been doing it on purpose. Right now, you're at a 78% chance that you're going to stay here in July. This is really important to get. If you go here and you take a look at 1 month ago, we were sitting there at 29.2%. Then a week ago, we were at 12. Then a day ago, we were at 19. Then we were at 21 today. What in the world has happened besides that they've come out and cut rates on the ECB? What's changed today? What economic data hit today that would have done this? They've given us another 10% increase that they're going to cut rates coming out. If you watch this week, all week, we've been creeping up no matter how hot. Remember that data I showed earlier? No matter how hot the data is coming out, they're saying this. Now you have non-farm payrolls tomorrow, and this lets me believe that they know something. So we'll be bright and early there with the pre-market live to watch this and watch the GME games and have a good time with it. But the really important thing is going to be watching non-farm payrolls and then seeing how this percentage changes so that we can make the right decisions. That's it.